What is going on, everybody? Hope you're having a great day. We are talking trading reversals 3, our top 3 here on the TC Trading channel that you need to know and utilize in your own trading and investing. Okay, so we are looking at SPX right now, the S&P 500 index, and we're going to start right here with our first and favorite trading reversal pattern. That is going to be the head and shoulders or inverse head and shoulders pattern. And we're going to zoom ourselves in and we're going to be able to see this very, very nicely. And actually, this happens to be a very nice pattern when looking at the big picture. Obviously, these patterns, guys, you can see them on any time frame, but I like looking at head and shoulders patterns across daily or weekly time frames, meaning that each of the candles that we're looking at is either a daily or a weekly chart or is a weekly candle. And this is going to be a great swing trade reversal, big picture, identifying a top, bottom, lining it up with macroeconomics can be very, very useful. So what you're going to see on a head and shoulders is that you're looking for something that looks like yourself. A head in the middle, that's a higher high in the middle, and then two shoulders, a right and a left shoulder, that are going to be relative highs, but not as high as that head. And what that tells us and what that signals is something like this. Establish a top and then build that reversal. And really what it tells us is when we have that second lower high, or that lower high versus the head, it's something that is very, very telling, and it's a very good area to go short against because your risk is essentially going to be the top of the established right shoulder, or if you're trying to guess, oh, this is the right shoulder coming up, I think we have a head and shoulders. If you wanted to do that, which I know it's not necessarily advisable, all you're going to do is risk yourself versus the highs here. So establish a trading plan that would risk versus the highs that you think are to be the head. If you think we're going to be setting up for a head and shoulders, maybe you have a macroeconomic thesis that takes you there, you could start to go short up into this area and your stop loss will be here, no matter what, no ifs, ands, or buts, if that's the plan. Now, obviously, you can sit back and say that's a terrible way to trade. Sure, but people do it, and it's up to you to manage your own risk. For me, that actually might be a really good risk-reward trade if I have a thesis macroeconomically that we should go down, and I'm sure that there were some that saw that and started to short as we've started to bounce up here into January. Now, a head and shoulders pattern again, guys. We have a left shoulder, a left high, relative high, followed by a dip. Then we have a higher high right here, followed by a dip, and then the right shoulder right here, which is a lower relative high compared to the head. This right shoulder tends to line up pretty close with the height of the left shoulder. You could have said that this was your left shoulder as well. You could have had this pretty big extended left shoulder. It's all relative and it's really based on what you see. But this head and shoulders pattern is a topping pattern. It is a bearish pattern. You're looking for a reversal back to the downside on the stock or index, whatever you're trading. And you can look for something similar in the other direction as an inverse head and shoulders. And if we look at SPX and zoom ourselves in on the left-hand side right here, what do we see? This guy right here is a perfect indication of an inverse head and shoulders pattern, my friends, where you have a lower low as your inverse head, and then you have your two shoulders, which are lows, relative lows, that don't go below the lower low or the middle low. That would be the inverse head right here. Now, these patterns tend to have what we call a neckline, and that neckline is the breakout point. So in terms of this inverse head and shoulders, our neckline actually happens to be pretty much where this blue line is right here, which is the 50-period moving average, this blue line right here. And once we cross back above that neckline, that was a very strong sign for a reversal to the upside after the inverse head and shoulders pattern played out, which again is a bullish reversal pattern right there. So that's your two head and shoulders versus your inverse head and shoulders. Those are your two reversal patterns that I love to look at across these bigger time frames to back myself into where the overall trend and direction may be headed on the market. Now, number 2, let's go over to Tesla stock, and we're going to pull up the second reversal pattern that you need to know, and that's going to be your bullish or bearish engulfing pattern. So what the heck does that mean? It sounds pretty intense. It doesn't have to be, guys. It's actually quite straightforward. So a bullish engulfing is what we're going to look at first. And I'm going to zoom ourselves in to find a perfect example, which we can see right on my screen, which I'll point it out here in just one second. So a bullish engulfing means that we're going to be seeing ultimately higher lows and a move to the upside. And what you'll notice right here is that we had a very, very substantial bullish engulfing candlestick right in here. Now, you may think, what the heck? Which one are you talking about? We're talking about this hollow green that's right in the middle. Now, a bullish engulfing is when you have the opening of a candle and the close of a candle that completely engulfs the other or the prior candle or the prior candles that we've been seeing. And in this case, we pretty much had that. So you had this day right here on July 1st, which was this day right here, just above us, this little guy right here, which was actually kind of a doji candle. The next day, you open just down towards the lows of that candle. You close, you actually had range down even lower on that day. And then we closed at the top of the candlestick all the way above here, the entire range of the prior day. That's a bullish engulfing where we pretty much engulf the entire candle with a positive green candle to the upside. And that is a sign of strength to come. And what do we see? Next couple of days, we saw a nice push to the upside on Tesla. And then beyond that, we actually saw higher lows developing, and the stock actually made a much bigger move to the upside the coming weeks after that bullish engulfing setup. Now, a bearish engulfing would be the exact same thing, just with a red candle that fully engulfs a green candle or a candle prior to that red candle. That would be your bearish engulfing, and that would signal downside coming. Now, the final reversal pattern that we also love here is a double top or double bottom. You can also call it a triple if you would like to. In this case, a triple bottom or triple top is even stronger than a double top, but we'll use a double top for this example because there's actually quite a number of them on Tesla's chart. Now, you got to give or take a little bit of leeway because it's not always that you're going to see candlesticks lining up to the exact scent of a bottom or a top indicating reversal. But what you're going to notice right here on Tesla is that at 3 of these lower highs that we've been seeing over the past couple of months, at least on this move back to the downside from October 2021 into 2022 of this chart time frame, these are all pretty much double tops where we have 2 candlesticks that come up to roughly the exact same price and can't break above, and then we see that followed by downside. Now, it could be the exact same thing with 2 candlesticks coming down to a low, to a price point, and then bouncing at that exact spot, indicated right back in here. And these are very, very nice patterns to look at in terms of reversals. So zooming in, when we see these 2 candlesticks that can't break over an area of resistance, that is your double top. And then we tend to see that be a great spot to go short against. So that's your risk in terms of your short position and look to take profits on a move to the downside. And the same thing happened again here. And the same thing happened again here with some substantial downside following a double top. Now, a double bottom is a bullish reversal. And what we saw was Tesla came down to looks like 756 2 days in a row, and it bounced at that exact spot and had a massive, massive run back up in the coming weeks after that, going from roughly 756 all the way up to over 1100 in just a matter of 2.5 weeks. Crazy, crazy moves, but that is what you could see off a double bottom and even a double top reversal. So there you guys have it. Let us know any comments, questions you have in the comment section down below. We're also going to leave a link to a webinar covering 3 trading signals to add to your arsenal. This platform is TradingView. All those links and resources will be down below in the video description box. Like always, make sure you subscribe here, hit that thumbs up button, and we'll see you guys in a future video. Peace.